Good evening. My name is Cathie Behrend, and I have the great opportunity and privilege to serve on the board of the 92nd Street YMHA for over 3 decades. Our program tonight is coming from 92nd Street Y, which is located on 92nd Street and Lexington Avenue in Manhattan. The Y was founded in 1876. As many know, 92Y gave birth 8 years ago to Giving Tuesday, which is scheduled the Tuesday after Thanksgiving each year. It is a stellar example of the impact of a global generosity movement. The movement has raised millions of dollars online and off and has activated Giving Tuesdays in over 60 countries. I have been fortunate to know Fiduciary Trust, John and his staff for many years, and suggested that Fiduciary Trust might consider partnering with the Y on a series of programs on financial topics. Both the Y and Fiduciary Trust share a perspective on the values embedded in giving. This partnership began last December with our first program, Dream It Up and Pass It On, which was about legacy planning. The Y has been recording programs pre-COVID, and it is available on demand on our website. Tonight's event is also being recorded, and we hope that you will indeed circulate it. I would like to thank Fiduciary, John, and the staff for their generous support, and in particular, Lisette Cooper, and also thank Melanie, Shannon, Doug, and Andrew of the Y for producing and zooming this out to you all near and far. To further introduce the event, I turn to John Dowd, the Chief Executive Officer of Fiduciary Trust. John is a member of the Franklin Templeton Management Committee. With over 30 years of executive management experience, John also finds time to serve on the board of Big Brother, Big Sister New York City and the Montclair Art Museum. John Dowd.
Thank you, Cathie, and very excited to welcome everyone here to the first in a series of 3 impact investing events that we're partnering with our friends at the 92nd Street Y. Fiduciary and 92nd Street Y do share a lot of similar values and are focused very much on driving meaningful conversations that strengthen our community, which is needed now more than ever. For those who don't know, Fiduciary Trust International was founded right here in New York in 1931 for families by families. And we provide wealth planning, investment management, trust and estate services, family offices services, tax services. It all work together so that we can provide comprehensive advice to our clients. Earlier this year, we were very excited to acquire Athena Capital, a leader in the impact investing field. And tonight, I'm very pleased that my colleague, Dr. Lisette Cooper, a founder of Athena Capital, and also now a vice chair of Fiduciary Trust International, will be joining the discussion. So as I mentioned before, tonight is one of a series of 3 events that we're going to be presenting in partnership with the Y, all of which are going to be learning about opportunities on impact investing, and ways to align our values and our visions in our investing approach so that we can have positive change through those actions. Additional events on impact investing and economic opportunity and climate change are scheduled for December and February, and more information is going to be available on the 92nd Street Y website. So now I do have the pleasure of introducing Pippa Stevens, who will moderate the panel of elite speakers tonight. Pippa is a markets reporter at CNBC, where she focuses on all aspects of the energy industry. In addition to tracking the daily moves in the oil market, she also covers renewables, as well as the growing ESG investing movement. She was previously a producer on the network's 12 p.m. ET show Halftime Report with Scott Wapner. She holds a bachelor's degree in classics from Princeton University. In her free time, she enjoys reading as well as distance running, including marathons, and she tries to go to the Metropolitan Museum and the Metropolitan Opera as much as possible. Also, Pippa was born and raised in Manhattan. So with that, I'd like us all to give a warm welcome to Pippa Stevens. Pippa?
Thank you so much, John, and welcome everyone to tonight's panel on impact investing and inclusive philanthropy. We as a nation are facing a time of unprecedented crises. We have coronavirus, we have social unrest, we have climate change fueling wildfires in the West and hurricanes in the South. And so it feels like impact investing is having a moment. Now more so than ever, people are thinking about how they can leverage the power of finance to tackle some of the biggest challenges that we face today as a society. So without further ado, we have an all-star panel lined up tonight. Amit Bouri is the co-founder and CEO of the Global Impact Investing Network. Launched a decade ago, it is the world's largest community of impact investors, and it focuses on increasing the scale and effectiveness of impact investing. As John said, Lisette Cooper is a vice chair at Fiduciary Trust International. She founded wealth management firm Athena Capital Advisors, which specializes in impact investing, in 1993. She grew the firm to $6 billion in assets under management, and it was acquired by Fiduciary Trust in March. Finally, Tulaine Montgomery is a managing partner and member of the executive team at venture philanthropy fund New Profit. She provides strategic and financial support for the most promising social innovators. Tulaine has extensive experience as a social entrepreneur, educator, and community organizer. And a reminder that we will be shifting to Q&A in a little bit, so please do submit all of your questions for our panelists. Okay, so let's begin here with the obvious. There are a lot of terms thrown out. There's ESG, there's socially responsible, there's sustainable investing. So Lisette, what is impact investing?
Yeah, given that we're talking about impact investing and inclusive philanthropy, that's a good place to start. So impact investing is really investing in for-profit companies with the intention to have a financial return. So really, investing with your head, and also to generate a social or environmental return. So investing with your heart. And if I was to go on and also talk about inclusive philanthropy, that's investing in social enterprises, so not-for-profit companies, for a social or environmental return. And it could be a financial return, but it's a financial return to society, not a financial return that comes back to the person that's making the investment.
Okay, Amit, does this square with how you see impact investing, or do you have a slightly different interpretation?
It does resonate, luckily, for the sake of the panel. But we are, and Lisette has been very involved in the GINS network for quite some time. But we ultimately, at its heart, impact investing is about putting money to work, to have a positive impact on critical issues facing society, while also generating a financial return. And we see investors all around the world. Our network includes investors in over 50 countries on 6 continents, who are working day in, day out to invest in companies that are helping to address issues like helping to mitigate climate change, increase access to safe and healthy foods, trying to provide inclusion, so financial inclusion, but also access to basic services like housing, healthcare, and education.
Okay, so then Lisette touched on it, but Tulaine, can you talk a little bit more about inclusive philanthropy and what that means and how that's different from impact investing?
Sure. Well, I would offer one, Pippa. One, it's great to be here with everyone, and thanks to everyone tuning in. My belief is that all investing is impact investing in some degree, because all investments have an impact. And so it's always interesting to think about what is the impact that we're having and are we keenly aware of it. But I totally resonate with Lisette's definitions. I would say inclusive philanthropy is all the things that she said. It is not charity. It's really important to distinguish between charity and inclusive philanthropy. I think one of the main differences is that inclusive philanthropy is really built around recognizing the expertise of community. And versus presuming, charity tends to presume that the people who are the keepers and holders of the funds have the expertise needed to solve the problems or shift the systems. And inclusive philanthropy says the expertise around the systems, the challenges, and the assets of community reside within community. So inclusive philanthropy leans on the expertise of community structurally and in terms of investment criteria and grant-making criteria.
Okay, so now we're on the same page, which is great. Okay, so impact investing, growing popularity, really having this moment, but it's not, of course, new. We've been talking about this for a very long time. So Lisette, kind of, how did it start, when, and why?
Yeah, great. Well, it kind of grew out of a very long movement about aligning your values with your investing that started off really, hundreds of years ago with the sin stocks that mostly religious investors didn't want to own tobacco and alcohol and gaming companies. So it was really exclusionary investing, which is a form of sustainable investing. It's a form of aligning your values with your investing. And that evolved into ESG investing, which was really positive, aligning your values with your investing and investing in companies that are really best in class. And then out of that came really this further evolution, which was making a difference, making really a positive impact with your investments. And that's much more recent. Along the way in my lifetime, the really big event was the anti-apartheid movement. And I think that was a real turning point and showed the amazing impact that investors could have by taking the opportunity to divest out of companies that were in South Africa and actually force the government of South Africa to get out of apartheid. That was huge.
Okay, so Amit, you run the world's largest community of impact investors. So let's get a little bit more specific here. What are the types of companies involved and what kind of investments are they making? And then also, how do trends, because you have a global perspective, how do trends differ around the world? How does the US stack up against Europe, Asia, et cetera?
Yeah, thank you. And I think one of the things that's so exciting about impact investing is that it is relevant across borders and continents. And we see impact investors active all around the world. You asked about the types of investors, and it's an incredibly broad range. So huge global financial institutions are active in the market, as are boutique firms. Individual investors who are even thinking about, those of more modest means, or thinking about, who do they bank with, and what are their assets being used for, all the way up to very sophisticated investors who work with private banks or wealth advisors or even family offices. The one thing they all have in common is that they're interested in putting their money to work to have a positive impact on the world. And that opens up a whole wealth of possibilities. One of the things that we see in terms of what's happening in impact investing around the world is it does take different shapes, often due to local context and what the needs are of a given community. In emerging markets, you see a much heavier emphasis on provision of basic services. And things like where people don't necessarily have the state providing access to healthcare and housing and other types of critical needs for lower income populations. But there's an incredible amount of innovation in many of those markets. In a place like the US, we see a lot of impact investing going on, both domestically, and particularly in communities both urban and rural, where that have unfortunately been victim of disinvestment over years. So many impact investors actually focused on the lower income communities that do not get as much investment from traditional investors. But many impact investors in the US are also exporting capital to other parts of the world. And I think it's important to acknowledge that it is truly possible to build a global impact investing portfolio that is suitable for a sophisticated investor.
Okay, so then Tulaine, what are some examples of types of inclusive philanthropy projects? What might that include, or investments rather? What might that include?
Sure. At New Profit, we have an initiative that we're running right now called the Future of Work Grand Challenge, and we're doing it in partnership with the X Prize organization and MIT Solves. And what we're doing is we're recognizing that with, just staggering unemployment numbers across the country, that we need to apply innovations and that enable large numbers of people in this country to upskill so that they are able to move through the impact of this pandemic on our economy and have the skills needed to be eligible for the sort of growth trajectory jobs. So that's an ambition people have had for a very long time. The Future of Work Grand Challenge is actually about a global call To date, we have over 800 people who have submitted an idea for how we can take workforce investment boards and really infuse them with innovation in a way that enables workers and communities to come to the other side of this pandemic whole and even perhaps stronger than they entered. Now, the place where the inclusivity comes in with this Future of Work Grand Challenge is that we've created workers boards that are actually serving as the experts. So I mentioned earlier that inclusive philanthropy is all about recognizing the expertise that exists within community versus sort of imposing a set of formulas on communities. So we're working with people who have struggled with unemployment, who have had to get back into the workforce. And we're saying, here are the innovations that we think could actually make a difference. And before we roll them out and invest dollars in them, we're actually having the experts, in this case, community, to give us feedback on if these are strong initiatives, strong innovations. And we're not being so enamored with the sort of ingenuity of the ideas that we ignore the opportunity to pressure test them with the people who are actually going to be leveraging the tools.
Okay. Very interesting stuff. So Lisette, let's say that, I'm a retail investor and I want to get involved, and this question really is for all of you. What can I do if I don't have a whole lot of money, but I want to make sure the money I do have is aligned with my values? What are my options?
Yeah, you can totally invest in ways that are aligned with your values through ETFs and mutual funds that are these ESG investments that are best of class. But another thing you can do is shareholder engagement. And one of the things that we've done a lot of lately, and especially with our gender lens clients that have been just really upset, I guess, after the Me Too movement and things like, a lot of things that have been happening lately, whether it's Jeffrey Epstein or the Access Hollywood tapes, or, a lot of different things that have happened in this country. They want to actually do something with their money that aligns with their values, and not just, talk about it, but do something. And so you can actually, as an individual investor, you can vote the proxies, the shareholder proxies, alongside your investment. Even if you only had one share of stock, you can do that. And so we've worked on that with clients and around the country, and had different working groups with different women. And, they've even gotten involved filing shareholder resolutions. You don't need very much stock at all to file a shareholder resolution. And so we've worked on gender pay gap. We've worked with child sexual exploitation online. We've worked to get women on boards. So that's a way you can actually get involved in impact investing, even with a very small amount of money.
Okay, and then Amit, what about from your perspective? Is there a way for investors to participate?
Yeah, and I actually just wanted to highlight something that I think Lisette's comments really got me thinking about, which is it's really important for investors, regardless of your means, to recognize that your money is doing something to the world. And what I think is so in common with people who are values-aligned investors and impact investors is that they have that fundamental recognition that there is a purpose to money that's broader than just making more money. That it is an active participant in shaping the society that we live in. And you can put it to work to have a positive impact on your local community or on broader social issues. Or at best, if you're not paying attention to it, you hope that it's doing something well, but it probably isn't. And so I think that first initial recognition that your money has a role to play in the future you're trying to create, I think is fundamentally important. And then to build on Lisette's questions, I think it really depends on the means that people have in terms of the services. But even something as basic as a savings or checking account, you can bank with a community bank, which and your savings account is an investment. Unfortunately, it's not a high yielding investment these days, but it is. It's an asset that the account will the bank will then use to lend to companies. And that can be companies at large, or it can be companies that are specifically trying to create economic opportunity or support green businesses. And that is a very kind of accessible role to anybody. And then, of course, more sophisticated investors have a broader range of options to be impact investors.
Okay, so then, how does impact investing and inclusive philanthropy, Tulaine, how do those fit into a traditional portfolio? How should people be thinking about these investments?
One of the things that's really exciting about impact investing is it it enables values-led investors to really look at systems change, right? And what are the intersecting systems that come together to create a set of conditions and outcomes for particular communities. And one of the ways that you can really build a cohesive, connected portfolio is to look at your philanthropic dollars, as first loss leader potentially, right? Like where you can engage in issues, topics, communities that may initially on paper be perceived as, quote, higher risk, but that where there's a real need for capital, for capacity building support, for infusion of resources, financial and otherwise. And what I find is that values-led investors, that when they care about a critical issue, let's say, for example, the criminal justice system or the American legal system, as I call it, that there can be a sense of real passion, focus, and desire to engage, a real lack of clarity about how to enter that space. And inclusive philanthropy enables these value-led investors to engage in the issue area, to learn the landscape, to identify the leaders and the ideas that really need resources to grow and thrive. And then that can be an opportunity to better understand the impact investment opportunities in that issue area. So I think looking at philanthropy and inclusive philanthropy as a way to engage in a really critical issue area that is often underinvested in when it's time for systems change and reform is an exciting way to build out an overall portfolio.
Okay, and so then, Lisette, you're talking to a large swath of investors on a daily basis. So, what are you hearing? How do people think about impact investing and inclusive philanthropy? And have you noticed, during coronavirus and, during these social unrest, have you noticed a shift? And is the conversation changing?
Yeah, absolutely. I mean, I think that really big issues during coronavirus, one has been about food insecurity and joblessness, and then the other clearly has been about Black Lives Matter, the whole, George Floyd, Breonna Taylor, Ahmaud Arbery, all of the big issues around anti-bias, racial justice, all of that. So we've gotten a lot of requests for investments around diversity, equity, and inclusion, and for lists of investments that people can do to make a difference in terms of making the world a more equitable place.
And are you seeing this coming really from investors wanting this, or is it more Fiduciary Trust, has these options that people can take advantage of that are out there, or is it more that people are pushing for this?
People are pushing for it. I've heard this not only from investors in our client base, I've heard it from my peer group of impact investors from firms that are doing impact investing. I've heard people who have different focus areas that they care about in terms of impact investing, and they're being sure to put a much higher focus on diversity, equity, inclusion, much higher focus on racial equity than they ever did before, much higher focus on anti-bias, anti-discrimination. And we're even hearing this from the big firms, the big wirehouse firms, it's happening on a nationwide basis.
Yeah.
Pippa, if I can just jump in here, I think this is such an important thing. I mean, obviously it speaks to the moment we're in, but I think what we've seen is like a compounding series of crises that I think have really helped to underscore that we need to change the system that we're operating in. I think first we had a public health crisis, which of course spurred an economic crisis. We then had, we have a racial justice crisis and also a climate crisis that are all kind of compounding. And what I also think is important, aside from the actual kind of pandemic itself, a lot of these other inequities were already in place. And what the pandemic has done is really put a spotlight on them, and it really underscored like how fragile the nature of work is, and how many people are vulnerable to shifts in our economic system. And I think what we've seen is absolutely echoes what Lisette has shared from her experience, that investors, large and small, major institutional investors and also individuals, are really starting to understand that they have to invest differently if they want a world that does provide more stability and sustainability and inclusion. And I think that many people talk about COVID accelerating trends that were already in place. We were already seeing a lot of momentum in impact investing, and that was only continuing to grow. But I do think that when people think about the recovery coming out of these crises, that impact will be front and center for many of their decisions. And it's important for us collectively as a community to really help them understand how to be effective at deploying capital to have a positive impact that really drives results for communities in the plan.
If I may, Pippa, just to jump in, I mean, we're all on this point because it's such a compelling one that, in the beginning of the COVID pandemic, there was a lot of talk of we're all in the same boat. We all, kind of raise your hand if you heard some version of that, right, back in February and March. And then pretty quickly it became clear that we're actually not all in the same boat. And I feel that this sort of the perfect storm of all of the crises and pandemics that were just named really highlighted that we may be facing the same storm, but we are in very different vessels in ways that just do not serve our economy, our democracy. And so I can say that as someone who has the pleasure of working with impact investors and philanthropists and social impact leaders, that there is this universal urgency around addressing the imbalances, the systemic and structural imbalances that were always there, but have been really laid bare through the convergence of all of these, national crises that we're navigating as a society right now.
So all of you touched on how, there definitely is, we're at this turning point and there is a spike in interest. But, on the other side, ESG investing or environmental, social, and governance investing, it took off during a bull market. And there are a lot of people that say, oh, this is a bull market phenomenon when everything is going up. Oh, great. Okay, yes, I can have some dollars for impact investing. But, Amit, as you said, we are now in an economic crisis after the pandemic. So does that change, how you foresee the landscape a couple years, 5 years, 10 years out? I'll start with you, Amit.
Sure. Well, I think one of the things that we've seen, impact investing really started to take hold, right after the last financial crisis. So the GIN was founded in 2009. At the time, we had just over 20 kind of founding members, and that was a big number at that time. Now we're well over 300. And I only share those numbers to illustrate one of the ways you can think about the growth of this market. Where now you see major investors of all types talking about impact investing, and I think it was in large part because it was coming out of a time of great disruption. It seems actually small compared to the crisis we have right now, in terms of the way it is affecting just fundamental elements of our society. What we're seeing is a lot of big investors who were not necessarily even paying that close of attention to impact investing before, now starting to reach out to us to figure out how they become more involved. And I think we're just at the very early stages of that. I think as we get out of crisis response and into recovery, there's going to be a lot of questions about how do we put people back to work? How do we do so in a way that gives them much more stability? Not every job is the same, and we are really starting to see the differences in terms of the fragility of some people's livelihoods. And of course, with the climate crisis, that'll also put front and center how do we address this crisis that does affect people disproportionately, who are lower income and more fragile, in a way that really is fundamental to us having a more sustainable financial market over the long term.
Yeah, Pippa, I would jump in on that because I would say increasingly we see convergence between traditional investing and sustainable investing or impact investing, that increasingly we see strategies that are ESG integrated, and that increasingly it's just another measure of quality, that it's risk mitigation. You see transition to a low carbon economy being very important, especially with all the disasters that we see out there right now, from hurricanes to fires to, everything else. And so that, you see oil companies underperforming, they're not doing very well right now. Anyone who has a low carbon portfolio is doing better. So that's, pretty much right in the face of traditional investors right now. That people are outperforming if they have a portfolio that's high on the E score right now. So I think that increasingly you're going to see these two things coming together, traditional investing and impact investing.
Okay, Tulaine, do you have any follow-up on kind of 5 to 10 years out? Is this still going to be a big topic?
Yeah, you read my mind, Pippa. I wanted to jump in. I think, I feel like the example that Lisette just gave is so important, right? And I want to just sort of underscore that there's this dominant narrative that we often have in the investing world that, the highest yield, the best profits, best returns are in some way in conflict with a positive, sustainable social outcomes and positive social impact. And what we're seeing is a collective desire to really not sort of make our way through this crisis and then get back to, quote, normal, but to reinvent, to reinvent these structures, to reinvent the workforce training opportunities, the educational opportunities, the housing, the access to healthy foods, the climate issues. So I do think that, 5 to 10 years out, my aspiration, my belief is that we will have taken a series of bold steps in the impact investing space to just sort of debunk the myth that if you are seeking returns, you have to in some way sacrifice social impact. We will have highlighted the examples like the one that Lisette just gave. We will see that as the norm as opposed to the exception. And you'll see a much larger number of investors, taking on impact investment strategies without feeling like they're risking return at a sort of at an unsustainable level.
Okay, just a reminder to everyone to please submit your questions if you have a question for our wonderful panelists. Okay, so now we have, a lot of grounding in the history, definitions, and how to take advantage of it. And of course, the most important thing, or maybe, is how do you actually measure what your investment is doing? You're setting out to have a positive change on society. So, this is an enormous topic. So, Amit, I'll send it to you first.
Sure. We spent a lot of time thinking about impact measurement, and we also call it impact measurement and management. Because the measurement, of course, is you want to get the data on the performance, but of course, we want people to incorporate that into how they manage their investments. One of the things that's been really exciting is that impact measurement and management has become incredibly popular amongst mainstream investors. As Lisette was sharing earlier, they're interested in more data on their investments, and they want to incorporate that into becoming more effective investors. We support a system. It's free. It's online. It's called IRIS Plus. It's IRIS with the plus sign. And what it is designed to do is you can start with a specific objective like gender equality, or trying to address something like affordable housing or clean energy access, and then identify the strategies and the core metrics you can use to track performance. And those are all backed up by evidence, and we've worked with a lot of stakeholders to develop those metrics. But we think it's important for investors to not only kind of have great intentions about the impact they're trying to achieve, but to really focus on measuring the results and performance and holding themselves accountable to ultimately achieve greater impact performance, just like we think about financial performance.
Okay, so Lisette, I would ask the same question to you. How can we make sure how can we do the due diligence that's required?
Yeah, and it's an evolving field, and it's well under development. The system that Amit talked about is very good, and there are other systems under development that we've been part of the process, the impact management project, and we can count numbers right now very well. We can count numbers of women on boards. We can count numbers of women in senior management positions. We can count numbers of tons of carbon saved. But that's some kind of crude measurement. We actually need to look at not just the output, but the outcomes. And so that's a work in process, and we're getting better at it. And different firms have different measures of what's really important to them. So we also have a lot of qualitative measures as well as quantitative measures. So, for our clients who are involved in this, they get some measures along the way, and then once a year they get an impact report that sums it all up.
Okay, so then Tulaine, are there any limitations of focusing on these metrics? Is there some downside to thinking about it like that, or how do you see it?
Well, I think it's so interesting. Metrics. It is possible to say, I'll say this, it's possible to be data driven and yet deeply ignorant at the same time. And what I mean when I say that is the thing about metrics is depending on who designs them and depending on how frequently and meaningfully those metrics are tested against impact and results and outcomes, they can be either useful or a hindrance to the sorts of results that we want to see. So I would say that the risk, I don't know if it's a downside, but the risk of some of the metrics conversations that I've heard is, again, the absence of the experts. I come back to my same point that if we're talking about impact investing in communities that have been historically and structurally less protected than others, whether it's around climate, employment, et cetera, that it's really important. It's not just a nice thing to do or even a diversity strategy. It's actually essential for impact and for outcomes to engage community and beneficiaries or users of tools as designers, not just as advisors, but designers, as leaders, and so that they can design metrics that are informed by the knowledge that only they have, that sometimes impact investors don't have. They have the intent, they have the will, they have the resource, they have a lot to offer. But when it comes to knowing the ins and outs of how an inequity plays out at the community level, at the population level, there's an expertise that we all are dependent on that comes from community.
So then following up on that, what's the traditional, is there any oversight of these types of investments, or is there, safety net's the wrong word, but is there some, way to make sure that investors are actually putting their money somewhere that's going to help? So Amit, I'll send that one to you.
Sure. Yeah, and I think if I'm understanding you correctly, I think one of the things that we're seeing is that there's been a great emphasis on better measurement and understanding your impact. And increasingly, we are seeing different ways that investors are being asked to kind of either asking companies to verify the data, or asking or investors are being asked themselves. And so I think that part is absolutely evolving. Some investors are getting their data audited, others are not. I'm doing that yet, but I do think ultimately what this is part of is an ongoing evolution of redefining success, where success is not just the profit generated for the owners of an investment or the owners of a company, but it is really looking at success across multiple dimensions, not just the financial performance, but also the impact you're having, and ideally on a longer term basis. And I think fundamental to that, we're now building and continuing to evolve the right measures to understand how we can best achieve those goals.
What I would add to that is I think part of the process is that those of us who are in the business of doing research, due diligence, evaluating investments is starting to ask the questions of those asset managers. And by asking the questions about measurement and asking the questions about diversity, equity, inclusion, for example, and about mitigating the transition to a low carbon economy, things like that, they think a lot harder about their answers, and they start to put into place the measurement systems.
Okay, so then Lisette, you mentioned that increasingly sustainability is linked to return. So what kind of returns are we talking about here? What's the range and what should investors expect?
Yeah, so I think that in very many cases, it's a market rate return. And for some aspects, actually, there's some things like diversity and inclusion is actually linked to doing better than market returns. So there are some places where you can do better, but admittedly, sometimes you're going to get a below market return. And you want to be sure that you're choosing to get a below market return for a better social or environmental impact. So you need to do your homework and understand the trade-offs when you're doing that. There are certain types of investments that deliberately are structured in a way that might be a bond type of return, even though they have a little more equity type of risk, for example.
Tulaine, you're nodding along. Is there anything you'd like to add?
No, I love listening to Lisette talk about this. So this is my enthusiasm.
Well, that's a perfect transition over to the Q&A. We have a lot of great questions coming in. So I guess let's start with someone has asked, what would the field of investments really look like after the systemic changes and overhauls you described? So Tulaine, do you want to take that one away?
Sure. Happy to jump in. I mean, one, this poor horse's back. I'm just going to just ride this horse all the way around the expertise. We would see metrics that were co-designed by investors and people residing in communities or navigating the issues that we seek to influence. We would see patient capital. We'd see a larger degree or percentage of patient capital. If we're talking about systems change, the news is it does not happen quickly. That doesn't mean there can't be rigor and measurement and real milestones where there's accountability. However, if we're talking about systems change versus incremental outcomes at the population level or in the social impact space, we have to increase the level of patient capital and get smarter and better and more confident in our long-term metrics over an extended period of time from more traditional investment cycles. So those are a couple of the things that I would say, but I'd love to hear from my fellow panelists as well.
I'm happy to add to that. I think it's a great question. I think it's so important for us to anchor on kind of what we're working towards at a systems level as well, because I do think We are at a time where we need to figure out a better system that will support this planet into the next century. And I think one of the things that I would expect is that, oftentimes, unfortunately, a lot of investment in business activity is kind of depleting resources. Right? It's extracting value from human resources, it's extracting value from natural resources. But I think what we're ultimately trying to work towards is an environment where investment is driving stronger communities, a healthier planet, and really reinforcing a more regenerative economy. And all the work that we do, that Jen is contributing to that bigger picture, we hope, and that's certainly how we orient our work and our network. But ultimately, that's the system that we want, is one where the markets are reinforcing a healthier and more sustainable planet and society.
Yeah, and what I would say is that there'd be more transparency, and that we would see better collaboration between government and nonprofits and for-profit organizations, so that we do take that long-term perspective and that we focus more on preventative measures where you get an incredibly high return on capital, but it's just that return on capital might not accrue to the person with the short term who's in the job, for that very short period of time. The returns are going to accrue many years down the road. So we have to figure out some of those very difficult problems of agency.
Can I just have a addition? I'm sorry, I wanted to add this quickly. I think in 10 years, maybe not 5, but in 10, we'll see investors that have a much more sophisticated capacity to identify where systems intersect. So, if I'm an impact investor and my quote issue is climate change and, in climate conditions, then I also have the capacity to understand how structural bias and structural racism have created disproportionate negative outcomes for specific communities. And so connecting those dots across systems, across issues would be the norm versus the exception. I'd say in 10 years out, I hope to see that as well.
Okay, so then moving to a slightly more granular level, someone says, what are 1 to 2 actions I can take now to learn more and invest in impact funds? Lisette.
Okay. I think that you can read everything that you can on the GEN website. You can read everything you can on the New Profit website, and ICCR is another one that I would recommend, and probably Proxy Impact is another one. So those are all, As You Sow, those are all nonprofit websites.
Any other places to turn, Tulaine or Amit?
Well, New Profit, of course. I'm saying I second that one. I think that those are all, because what happens when you look at, say, for example, the New Profit website, you get the data and the broader story, but you also get exposure to the range of ideas and organizations and social impact leaders. So I think that, you can really get so much from each of those sources that Lisette named.
I think one thing I'd add, it's really important to get smart, and Lisette, did a good landscape of all the places where you can read some, just great kind of knowledge and content on these issues. I also think if you're in a position where you have a financial planner, or is to ask about opportunities, and I unfortunately, some of them will not give you a satisfactory answer right now, but it is important for them to know that these are what their clients are interested in, and hopefully some, depending on who you ask, will have a lot of great answers for you. And I think, but we are in this moment of transition where we are seeing a groundswell of interest, and depending on kind of who you're working with, they may or may not be well equipped, but hopefully they know that if their clients want it, that they will get smart about it, because ultimately we want to make sure that these types of opportunities are accessible to everybody, regardless of what your wealth is and how many resources you have. As long as you have something to save and invest, that I think it's important that you have the option of putting that money to work to help invest in the world that you want to live in.
Yeah, thank you. That's all very helpful, because it can seem overwhelming. There's a ton of literature. There's a ton of different options. So even for people who want to take advantage of this, it can seem, very daunting. So yeah, those insights are incredibly helpful. All right, someone has asked if inclusion equals excluding white men. So Tulaine, do you want to tackle that one?
Sure, why not? I would say a couple things. there's a way that language is so important. And Pippa, you opened us by having us define the terms that we're using. And I do think that there's terms that we often use outside of their meaning. So for example, diversity. Me and Amit are not the two diverse panelists, right? Like diversity does not mean the absence of white people. Diversity actually means multiracial, multi-ethnic networks, communities, and organizations where everybody has a place, a role, a voice. So I think that we have to be really mindful, particularly in this moment, of not getting, as Malcolm X said, bamboozled by kind of the narratives that are promoted around division, because all of us have a critical role to play. And when we talk about inclusive philanthropy, it is about building multiracial coalitions across identity, across experience, across economic reality, so that there can be an advancement of equity and equitable well-being for everyone. And that's not meant to be pie in the sky. It requires all of us, the kind of systems change, not incremental change, not reform, but systems change that we're talking about tonight really does require everybody, every sector, every identity group. And we have to just reject the narratives that tell us otherwise, is my opinion.
Lisette, I see you nodding your head.
Yeah. It's because, there's research that talks about, work inside of companies. I think that, social change starts at home, and all this kind of work we're talking about inside companies as if they're out there, but it really starts here and in your own companies, your own family, your own communities. And there's research that shows that, companies that have a diverse and inclusive workplace perform better. There's more employee engagement. And it means, diversity means just exactly what Tulaine was saying. It's not, diversity is diversity of backgrounds, it's diversity of race and ethnicity, and inclusion means that everybody has a voice at a table, and a team is stronger when the people who have diverse backgrounds are actually speak up. And when they speak up, then we can come up with better solutions, and those better solutions are going to make a better society.
Okay. Amit, anything to add?
I think those have been such thoughtful comments. I can add just a little bit, but I do think fundamentally what we're experiencing right now at this moment in history is my hope is really leap forward in making sure that underrepresented voices actually have their seat at the table. And that is, really about, it's not about kind of, excluding one group, shifting to excluding another group, but it's really about actually having the people who are making decisions and the people who are represented at all levels and organizations do reflect the entire community and society that we live in. And I think fundamentally, I hope everyone can get behind that. But of course, we have a long ways to go before we get there.
Are there any leaders in this, across corporate America or otherwise? Are there companies that really stand out as an example of what we should be doing? Any thoughts on that one, Lisette?
Well, what comes up with me is that there are some scorecards. Like, I don't have off of the top of my head the gender and racial equity scorecards, but I know that they exist, and I know where to find them, like websites to go and find them. And so you can search the web, and there are companies that get an A, B, C, and F on these metrics. So unfortunately, I can't just pull it up off the top of my head, but those things are known and ranked and rated and called to account.
Okay, this is something that we touched on throughout, but someone has asked, why is it important to focus on impact investing now during all the crises we're facing? So Amit, I'll let you take that one.
Yeah, I would, of course, argue that it's always important to focus on impact investing. But what I think is important, I think was probably behind this question, is that there's so many things drawing on our attention, and there's so many different things that we want to put our time and energy into, and obviously that's a scarce resource. But the way I would think about the role of impact investing is that we are always going to be investing a lot of money as a society. And it's important for us to be very intentional about what we are trying to accomplish with that money. And it doesn't mean it's at the expense of other things, but it's really about putting front and center that we not only want to invest to have more money later. But we want to invest to have a world that is more inclusive and more sustainable and a more fair society, into perpetuity. And of course, that means that we have to back that up, those aspirations and hopes with capital. And impact investors have been honing this discipline of putting capital to work to have a positive, measurable impact. And it's so important now that for all those folks who want to be part of the solution to these crises, that they think about their role as citizens and as voters. They think about their role as philanthropists, but they also think about their role as investors, and make sure that all their different types of capital, whether it's social capital, political capital, grant capital, or investment capital, are put to work to create that better future.
I feel like what you're talking about, Amit, is alignment, right? That the work that you do, the investments you make, the philanthropy you give, the mentorships you develop, right? The networks you convene, that there's alignment and there's consistency across all the dimensions of your life. And so the investment aspect of your life is an important dimension. It is not the only one, but it is one that matters, certainly in times of crisis such as this.
Yeah, absolutely. And I think one thing, we've talked a lot about how we do have like systemic crises and issues that we're contending. And that means we also have to have systemic responses. Yes. So we can't just solve it with the markets. We can't just solve it with government. We can't just solve it with philanthropy, but we actually need to make sure that all of those different kind of approaches are doing their part as part of the solution. And it's really important that the private sector plays a positive role in addressing these crises, and impact investing is one way in which you can do that as an investor.
Okay, this is a good question. What do you see as the greatest threat to the impact management and inclusive philanthropy space? Lisette.
Oh my goodness. Well, I would say it probably is the political environment. I mean, I would say that's made a huge difference. We've rolled back a lot of regulation on the environmental side over the last 4 years that have made it very challenging, and that would continue to make a difference. I mean, right now with Ruth Bader Ginsburg's passing, what happens with the Supreme Court could be very challenging for us going forward.
Tulaine, what about you? What is a challenge that's facing the industry?
Yeah, I would say for inclusive philanthropy, the risk is that we sort of default back to charity. And I believe that a charity framework in terms of the criteria and metrics for success, the relationships you build, the models you fund and invest in, that they just aren't enough to do the level of systems change that is being called for right now. So I think a risk is that, because philanthropy is often where people go to feel good at a certain level. And because if we're talking about systems change, it means we have to confront and interrogate some inequities that don't feel so good to truly understand. And yet we have to move through that in order to make the right kinds of decisions in terms of inclusive philanthropy. So I think, defaulting to comfort is probably one of the greatest risks I see in the inclusive philanthropy space.
If I can just add one other thing. Yeah, I think one other thing that's so important is that, right now we're dealing with such huge systemic crises, it can feel overwhelming. And there can be a sense that these are too big to actually address, with my own actions, right? And I think that it is, that can lead to a certain type of apathy that isn't because people don't care, but it's actually because it's just overwhelming. And what I think is really important is for folks to really kind of engage. And this is hard work. What any of these crises that we talked about, whether it's overcoming systemic bias and structural racism, or if it's trying to address an economic recovery that's this deep and wide, or trying to address something like climate change, they do require kind of everything we have firing on all cylinders and in harmony. And it's important that everyone does see that their role, whether the resources are large or small, actually, is part of the solution, and it is not something that we can opt out of and hope someone else will take care of it. And I think at a systemic level, that is one of the biggest threats that I worry about.
Okay, and then, Lisette had mentioned the political environment, and of course, Europe has been a leader. So Amit, what are they doing in Europe? How are they ahead of us?
Well, I think one thing that we see is that, we see a lot of leadership from investors from all over the world. And I think that's really important. And what you see in Europe is also, a political and regulatory environment that is helping to propel forward a focus on sustainability and on climate. I think there's also, efforts in the works around inclusion, but I think, making sure that government sees its engagement with the private sector as part of driving more capital and resources to addressing these systemic issues like climate change and inequality is absolutely critical. And that one thing that's a benefit of being at the GIN is that we get to see all kinds of great activities happening in the US, in Europe, in Asia, in Africa, and Latin America, where there is a lot of great kind of forward-looking thinking coming from all sectors of society. We, of course, need more of it across the board, but I do think that it is important for us to look beyond our borders when we think about how do we draw from best practices, because there's a ton of great work being done all around the world. And that's part of why we are designed as a global network.
Yeah, and one thing I might add is, we're generalizing a lot around different kinds of impact investors, but climate is a big one. Economic opportunity and underserved communities are very big. And so I think that's why I focused on the regulatory environment and that aspect, because there's so many different stakeholders. And when you emphasize an environment that lets capitalism in its pure form, really reign free and take advantage of other common resources at the expense of other stakeholders, then it's a very challenging environment for impact investors and for the kinds of goals that most impact investors have, even though they have a variety of different goals.
Yeah, okay, we've covered a ton of ground tonight. So before we wrap things up, I just want to do a quick, summary and your last most important thought that you want to leave the audience with. So Tulaine, I will let you start us off.
Okay, I will say in summary that there's so much that's disheartening and troubling, and yet there's at least as much that is, to me, really encouraging. The opportunities are so tremendous. And so I'm really excited for this conversation and appreciate everyone who's been part of this tonight, because, we really do, the sort of breaking down that we're experiencing in our society, economically, socially, et cetera, means that we can actually reinvent. We can actually invent not just what gets us back to where we were, but to something better. So I think it's really critical to have proximity to the issues you care about and the communities you care about. And if we can just all find ways to proactively seek learning and seek relationships and connections outside of our experience. It may sound simple, but proximity is one of the most powerful ways to do smart design. And then through smart design, you can reinvent systems. And I think we have an opportunity to do that now as a country.
Okay, Amit?
Yeah, I think, thinking along similar lines, there's so much, that has been disrupted, due to this pandemic and all the crises that we've been talking about. And there's so much discussion about like returning back to normal. But what I think is really important is that one of the things we've learned is just some of the issues with what was normal before this crisis, and it's really important for us to really think about how do we shape the next normal. As Tulaine was talking about reinventing the system, and that I think is really important. We have an opportunity to build forward a different system that we really want, that will help provide a more sustainable planet, a more inclusive society, and also more sustainable financial markets. And I think what I've really appreciated about this conversation that we have covered such a range of ways in which folks can engage, whether it's through philanthropy or through a variety of different investing tools. It is so important that we put our resources to work to have a positive impact on the world, and with a long view about the society that we really want to shape for the future.
Okay, and Lisette?
Yes. And that is that every investor can make a difference. Everyone in this audience can make a difference. And it doesn't matter how little or how much money that you have, and that you can invest in ETFs and mutual funds with very small amounts of money that are aligned with your values. And there are many different choices these days to align with your values in many different ways, and that you can vote your proxies, and that you can, you can align you can vote your values with those shares. And even you can go online. There's something called Proxy Preview that's free that you can find and learn all about that. And so everyone can participate, just like everyone's vote counts in this election that's coming up. Everyone's vote counts with your shares.
All right, that is definitely an inspiring note to end things on tonight. So I'd like to thank so much you all, our panelists, Lisette, Tulaine, and Amit. you've left us all with a lot of really interesting thoughts and ways to take action for all the investors out there who are looking to get involved in impact investing. And thank you so much to all of you for tuning in tonight. Quick programming note, there are a ton of exciting events coming up at the 92nd Street Y, including on impact investing and economic opportunity, as well as impact investing and climate change. So be sure to head over to 92y.org for more on that. And a big thank you to the 92nd Street Y, as well as to Fiduciary Trust. And thank you all again for joining us, and have a lovely evening.